the federal government loans American International Group, AIG, $85 billion to prevent the nation's largest insurance company from collapsing. Early Show national correspondent Jeff Glor is at the New York Stock Exchange. Jeff, good morning.
Hey, Maggie, good morning to you. Should be very interesting to see how the markets react today after, for the second time in a month, the government uses taxpayer money to save a private company.
Yes, it is Uncle Sam to the rescue. But oh, what a price tag. Faced with the prospect of a $1 trillion company failing and the further crisis in confidence that could have triggered, the Fed decided they had no other choice. This unprecedented $85 billion loan will shore up a massive insurance company and give the government an 80% stake.
This is a very big deal because by bailing out AIG, it's essentially bailing out the entire banking sector.
It's a move that seemed unthinkable only a few days ago. But these have been a few days that changed Wall Street forever. Lehman Brothers, bankrupt. Merrill Lynch, sold in haste. Now AIG, another outfit stunned when bad bets in the subprime mortgage market came boomeranging back. On the trading floor, Tuesday was another wild day for stocks. Swung up, then down, then up 141 points. Despite calls to rally the market with a rate cut, the Fed left its key Fed funds rate unchanged at 2%, primarily over concerns about inflation. But it's not all down news. Your 401k may be tanking, but your gas tank is smiling. The price of crude oil has now fallen $55, or 37%, since it peaked in July, because of the slowing economy and decreasing demand. There's talk of the national average for a gallon of gas soon dropping below $3.50. Even more amazing when you consider Hurricane Ike was supposed to push prices way up. The market more powerful than a massive hurricane, but still not done weathering the storm.
If you were going to put this into a baseball metaphor, I think we're in the 6th inning of a 9-inning game, and this isn't a doubleheader.
There is also talk this morning of the Feds trying to find a buyer for Washington Mutual and also Morgan Stanley potentially partnering up with a commercial bank. And Maggie, we should mention, by the way, that if AIG's stock rebounds, those taxpayers do stand to reap a benefit, a profit from this if that stock goes back up again, because the government is now an equity stakeholder.
All right, so fingers crossed. CBS's Jeff Glor at the New York Stock Exchange. Thank you. Okay. Now here's Harry.
All right, thanks, Maggie. Let's talk about this bailout of AIG with Liz Claman from the Fox Business Network. Good morning, Liz.
Good morning, Harry.
All right, was AIG just too big to fail?
Well, haven't we heard that about Fannie Mae and Freddie Mac? But apparently, the U.S. government, Treasury Department, insurance executives, and real experts were saying that, yes, AIG would have been too big to fail. I know this sounds like a broken record, but they did what was called a stress test over the past 48 hours, and they tried to figure out what, Harry, would happen if AIG went under, and they put it as catastrophic.
Where is the penalty for these bad business practices? Where do these guys, so the CEO is let go, but hello, these guys think they've been gambling with the house money for years, and it's our job to bail them out?
Apparently so. And you know what's fascinating, Harry, is that last night late, the Treasury Department held a quickie press conference, and they were trying to explain it's a stretch to call this a nationalization. It's a stretch to call it a bailout. Mm-hmm. The U.S. government is not getting in the insurance business. But in essence, they really are. They're taking an 80% stake in the company. And yes, a CEO or a board member here and there gets let go. But just 2 days ago, you and I were talking about Lehman Brothers and talking about the fact that these companies, and I use the analogy, pulled themselves up to the gambling, the roulette table, and they lost, and suddenly it's your problem.
Yeah, they didn't know when to back away. Does the federal government have unlimited funds to continue bailing out businesses that made really bad decisions?
Your funds are their funds. That's us. So if you talk about taxes and you wonder where is this all going, unlimited funds, you would think that they have, because we're now looking at Fannie and Freddie and that rescue, and then the situation with AIG of $85 billion loan. Although I talked to some people really quickly this morning who said this is actually an investment, and the U.S. government could end up, depending on the terms of the loan, make some money here.
There's been some suggestion that there be like a resolution trust. Remember during the S&L crisis in the late 80s, early 90s, this government entity got together. They gobbled up all these bad assets and then sold them off piecemeal until the crisis passed. Might that be an alternative?
You know, we're getting to that point, Harry. It's a great point to bring that up. But I'll tell you something. It looks as if you talk to people who are looking at this situation, they say, okay, this is it, finally now. But we heard that with Bear Stearns being bought by J.P. Morgan back in March. We then heard it with Fannie and Freddie. Okay, that's the worst, these gigantic mortgage companies.
Right.
Now that they've been rescued, it should be fine. And here we have AIG. I'm not betting that this is over in any way, shape, or form.
And in the end, just very quickly, AIG, this is not about your life insurance policy or anything like this. Exactly. These were the policies that they wrote on those crazy instruments that helped raise the money for all those bad mortgages that have gone under in the last 2 years.
Exactly. Your auto policy is safe. Your insurance, your general insurance, life and home, that's safe. No, these were these credit default swaps, and not to get too complicated. But yes, wealthy, sophisticated investors made bad bets, and they had AIG insuring them. And when these all went down, AIG began to falter very badly to the point where the government has now had to step in.
There you go, Liz Claman. Pleasure. Thank you so much. Do appreciate it.
Anytime.